So today we're going to be talking about retail versus institutional trading. And listen, there's a lot of realities. This is kind of a very interesting business, as they say. And there's a lot of big sharks looking to capitalize on the little fish in the pond. Today we're going to talk about what that is and how you can kind of manage that situation being a small retail trader up against Goldman Sachs or some billion-dollar hedge fund. So that being said, everyone, I am lead trainer with Stocks Trade, Tim Bohen, and been actively mentoring at the Stocks Trade channel for over 8 years now. I have an amazing channel. Definitely check out all the videos, talk about technical indicators, a bunch of news, a bunch of amazing stuff. So that being said, you might be wondering, as a retail trader, now remember just kind of some terms. When I say retail trader, when we talk about retail trader, some people get confused. They think you're trading Macy's or Target or something. No, when we talk retail trader, that is just a normal Joe or Jane trading their own money, okay? So like you might have heard like a family office, okay? Like a family office would be someone in the family that's trading the trust's money, okay? Obviously, I'm sure you've heard of a hedge fund. Typically a hedge fund is sometimes the hedge funds, the manager will have some money in there, but maybe not a ton, but they basically raise money. So they go out to accredited investors, wealthy individuals, institutions, etc., and they bring in capital to trade that to then pay back the investors. Then think of like banks. Basically, banks are doing the same thing, but to pay their shareholders. As a retail trader, you're paying yourself, baby. That's the best part, okay? So you keep all the profits. You keep all the losses, which is the bad part about like the bank. Would be nice to be a bank. Would always be nice to be like Goldman Sachs or Morgan Stanley or Lehman Brothers or Bear Stearns. And when you make money, you get to keep it all. And then when you lose in a colossal amount of money, you get bailed out by the taxpayers. Must be nice. Wouldn't you like that as a retail trader? You get bailed out by the government every time you take a crippling loss? Anyway, don't get me started. So the point is, as a retail trader, you're trading your own money in a E-Trade account, Interactive Brokers account, etc. Now, at the end of the day, you have access to the same amount of opportunity, but what you don't have quite frequently is access to the same amount of information that the hedge funds and the banks, etc., do. Now, actually, let me rephrase that. You have access to it, you just may not have access to it as timely, okay? So what happens in the stock market, and this has happened since the beginning. I mean, you think of the stock market starting out in the early mid 1800s, most of the biggest trades were made on information that wasn't necessarily available to the public, okay? Some railroad going through or some bridge getting built or whatever that was. The JP Morgans and the big banks, they knew about this information days, I mean, this is the 1800s, maybe weeks, months, maybe literally years before the average trader had access to it. So by the time the average trader found out about this railroad getting built, well, it was already priced in. Maybe you've heard that. So the stock had already gone from $100 to $200 by the time it's in the New York Times and the average trader can actually trade it. Now what happens, and this is what has happened to retail traders forever, is once the news goes mainstream, now the institutions start selling. So while you're buying, okay, they bought at 100, now they're selling at 200, you now see the news, you get excited, you're buying their shares at the top, and then you get bagged, as we say, okay? So that's one of the biggest reasons how institutions capitalize on the retail traders. I'm going to talk about a way to fix that in a minute. I'm all about solutions. So the other way is, and maybe you've heard of like Robinhood, where they sell your order flow. Now, it's always funny, Robinhood, I mean, I'm not defending them. Yes, they're profiting off of, young people with small accounts, but it's a business at the end of the day, and they're providing you something in exchange for that business. They're giving you free trading, giving you free tools. I mean, the Robinhood app is a pretty nice app that you get access to free. You get access to free commissions. I think about back when I got started trading as a retail trader. I mean, I would have great months, but then I'd get to the end of the month, I'd look at my account statement, and 80% of my profits went to commissions because number one, the commissions were higher. And number two, you're just trading small commission or small position sizes. So even if it's a $50 commission. Well, if you made $100, you just gave away half of your profit. So I think Robinhood's amazing for a newer trader. Now you will outgrow it. I want to be very, very clear. If you have a bigger account or you have experience, get off of Robinhood. Okay, get off. It's basically for very young people or people with very small accounts or both. Maybe you're young and have a small account, maybe you're old and have a small account. But what a Robinhood does is they actually, even though they give you free commissions, they quote unquote, air quotes, front run, sell your order flow, but it's just such small percentages. You're talking about small percentages of a penny per transaction, so it really doesn't hurt you like the olden days. So that's where I hate to say defend Robinhood, but it's way better back when I got started when the commissions were just brutal. Now at least you're just getting chiseled for pennies here and there, okay? Now, the other solution is, and we'll talk about that, you can move to a better broker after you grow your account. So let's talk about fixing the problems of the information advantage. One of the best ways you can do that is check out Stocks to Trade Breaking News. I will link that below. So what that is it's built into our platform and it's incredible because basically you've got two 25-year Wall Street veterans that are watching institutional grade news, whether it be on a Bloomberg terminal or some of these kind of like closed chat rooms or all of the best premium data feeds. And then what they do is they're monitoring all these feeds on all these monitors and they handpick information that is actionable to small cap traders. So now you can get that information within seconds of what the institutions are getting. So basically these guys are getting it the same time the institution's getting it and then dropping that in breaking news chat. Is it exact same time as Goldman Sachs? No, but you're talking seconds in difference. So you can really cut down that information advantage. Going back to my corny analogy of the railroad, you ain't finding out about this stuff months or years later. Seconds. You can make a real difference in a second, okay, or seconds. So check out Breaking News. We'll link that below. It's incredible. Like I think back to before I had Breaking News, I used to subscribe to 5 or 7 different data feeds of different providers. And number one, there were several bad things. The biggest was the cost. I mean, some of them were $50. I think the highest priced one was like $250. Add all of these together, just for these data feeds, I was paying $500 to $700 a month just to have the feeds. And then the worst part was I had to launch all these apps, okay? Some were Java apps. I mean, this is going back a little bit. I got to run all these apps. I got to arrange all the windows. So then I got to watch it. Like that was the biggest thing. The money was kind of annoying. I didn't like paying all those fees, but I got to sit here and watch 6 different windows to see if there is something actionable. That's what Breaking News is doing for you. And they just give you the stuff that matters. So if it's news that isn't, it's about some boring stock, General Motors or something that moves pennies a day, they won't drop that. They know it's not actionable. So you're not spending money and you're not spending time, which are probably 2 of the things you're really struggling with. Listen, if you're a new trader, part-time trader, and you got a job and you got kids and and trying to trade on top of that, you don't want to throw away money, obviously, but you simply just don't have the time to do all this stuff. Check out Breaking News. Next thing, and I kind of mentioned this earlier, when it comes to like the Robinhoods or the Weebles, just understand that those are a tool and you're paying for a tool. So yes, they are taking some of the order flow, they are capitalizing on your trades, they are front running you, but it is small. And you will grow over the time. And if you make good decisions and you trade the best stocks, if you're making some of the huge gains on these stocks that move 100, 200, 300, 400, 500%, it doesn't really matter if you're getting chiseled for a few pennies here and there. Now, also understand that it is a tool, and that's the cost you're paying for that tool, and you will eventually outgrow it if you make good decisions. Good decisions beget more good decisions, begets more profits, begets a bigger account, and then you'll grow and you'll move on to Interactive Brokers or E-Trade or maybe you'll have an account with Goldman Sachs someday. So anyway, that being said, everyone, if you want to get really into the nitty-gritty of this stuff, if you've never understood the information advantage and why Goldman Sachs makes billions of dollars a year trading the same stocks you're trading, or why they always seem to be there first, or understanding how to get the right brokerage account for you, check out the Daily Income Trader System webinars. We'll have that link below, live 6 times a day, 100% free, all through the day, even on weekends. So if you got that time on the weekend, you can be studying. Click that link below and hope to see you on the webinars.